Hi, folks. This is Lee with the Market Sense for the week of September 3rd, 2019. The charts in this presentation are provided to us from the Trade Navigator software, which is put out there by Gettess. And this is a weekly bond chart. And boy, if you just look left to right, is that an impressive rally or what? What we've got here is the potential to start rolling over, but no indication that it really is. We've got Monday and Tuesday this week, and this is a lot of movement for early in the week, but it's still inside of the previous week at this point. And the previous week kind of opened and closed almost in the same spot. Now, that type of indecision could lead to a breakdown of some kind, but gosh, unless they get below like the 162 area here, wouldn't really look like a breakdown. And in a much bigger sense, they could go all the way down to this mid-Keltner channel, which is like 156 or so, and that would just be putting them down to the highs of the congestion that they broke out from for this last rally, which is normally what a market will do even if it is continuing to trend. So, I mean, how about that? You can have an 11-point break and it doesn't change the trend? Wow. What I'm looking for initially is this 164.10 area, this middle moving average here. If they can hold that high, well, even though they've already traded up to the projected high here, if they can hold that 164.10 level as support, then you got to assume they could go even higher. That's scary to think about higher bond prices, but until they roll over, you got to assume they can still go higher. So I'm kind of looking for them to break down, but I don't see any sign that they are yet. And again, the first thing they got to do is get below 162. Nothing looks bad until they do that. And if they hold that 64.10, well, gosh, they still look awfully good. Stocks, of course, look quite a bit different, and it's interesting. We have a fair amount of volatility here, but it's really all in the same place. They've been in the same place for about 4 weeks now, maybe a little longer. The question is, do we call this low last week? Is that really a test of this low? If it is, they could just rocket up out of here and be at new highs at no time if that's all the testing they can do. It could be. I mean, it's hard to read that. It's not what I'd really like to see in a test. I'd actually like to see a marginal new low at least. But, if that's it, boy, the bulls might be in control. And just as in bonds, this middle moving average here is really a critical point. That's 28.84.85 in this market. And if they can hold above that, then I think you got to assume that 29.79 or so up here at the projected high is definitely a possibility. And all we need is news that China and the U.S. have come to an agreement on trade, and kaboom, we're just out of here. The flip side of that, of course, is all we need is a piece of news that says they're not talking anymore, and kaboom, we're out here to the downsides. That makes it a little tough to trust anything you see. 29.44 is the upper moving average here, and it'll be interesting if they hold that, because that would, kind of look like we're just still sideways here. And this is a fairly wide swinging sideways, but it's still just sideways. They're not going anywhere. So the key, I think, for me is I might be willing to, if they seem like they're holding 28.84.85 area, might be willing to take a shot at them, assuming we'll at least see them test 29.44 from there. But that could actually be a jumping off point for them rocketing much higher. And if not, down here is what, 28.20 is the lower moving average, and they could certainly go there with no problem. So I would not be just sitting with them if they start to break this. So that's what we've got for you today. I hope you can find something profitable to get yourself